Okay, so good morning and welcome to the Macro Snapshot. We are Thursday, October the 30th, 2025, recording this in the morning. Okay, guys, so let's just look here and just see what happened. Obviously, we had the FOMC yesterday. They cut. There were two dissenters. We had the dissents of Miran, who wanted to cut 50 basis points. And interestingly, the head of the Kansas Schmidt actually decided not to cut. So that was a hawkish dissension. And the question really is here, is Powell potentially losing control a little bit of the FOMC? Because at this point, he's essentially become a lame duck with only a few months remaining on his in his sort of leadership. But what you can see here is that the market took that very, very hawkishly. And we can see here now that for December, we only have a 17 basis point of cuts priced in. So only a 70% chance of a cut. And that was almost 100% before this sort of decision. So if we actually just look as well, just want to show a couple of other things here. Let's just bring them up. If you look here, just look at the SOFR curve. So this is where we are now, with which is the live data, which is the white one here, and you see this sort of orange line is where we were a week ago. So if I just zoom in a little bit, you can see here that essentially what's happened is that the market has repriced. This is the yield on the right-hand side here. So you can see that, especially this area, let's say the beginning of next year, so sort of January, March, April in 2026, you see along here that there's been significant repricing yesterday, about 10 or 12 basis points. So essentially overall, the market took out about a half of a cut, so about 12 and a half basis points. And there's a lot less certainty now that the Fed actually will cut in December. Maybe they'll pause in December, skip, and cut in January. Because Powell, really what he said, which really got the market's attention, apart from the fact that there was a dissent, they did cut 25 basis points, which was expected. He said that a cut in December, in answer to a question, was not a foregone conclusion. And then he added for emphasis, far from it. So really, he's obviously trying to cool down the markets. And he essentially said that they need more data. They don't have any data really at the moment because of the government shutdown. There's a lot of uncertainty. And he used the analogy of, he said, well, what do you do if you're driving in the fog? You tend to hit the brakes and slow down because you're not sure what the future will bring. And so therefore, basically pouring a little bit of hawkishness, all over the meeting. The other thing which got the market's attention was that they did announce the end of the runoff of the balance sheet of by was it December the 1st. That was kind of expected, and in theory, that could have been a positive for the market, for the bond market as well, more liquidity coming in the market. But essentially, what they said, apart from the treasuries running off, the MSB, so the mortgage-backed securities, MBS rather, they would also be running off, but they would be replaced by T-bills. They would essentially use the proceeds to buy T-bills, not so much the longer duration bonds. So in essence, the balance sheet will remain stable in terms of its size. And basically it's going to be topped up not by longer duration bonds, but by the T-bills at the very front of the curve. And so that's not necessarily super positive. In fact, you could argue it's a disappointment to the long end of the curve. So basically the short end of the curve and the long end of the curve were both sort of hit by that. And if we see here, just giving you an example, this is a pricing for March. And this here's just a mechanical 25 basis points. But this is the comment here. This is a tick. And you see here at about a quarter to three, so about 2:43, when Powell made his comments about, that December cut was not at all a foregone conclusion. You see here that we went up from about, 47, 48 basis points priced in for next March of 2026. We went all the way up here to only about 35 basis points. So that was about 10 or 12 basis points, which, as you can see, is essentially half of a cut taken out. Keep in mind, a cut's 25 basis points. So generally, when the market wants to reprice in the SOFR market, it'll take out a half cut, which is about 12 and a half basis points. And that's where we've remained overnight. So if we actually look then, let's just look at a couple of charts here. Where are we going to go here? Let's have a look at a few charts. Oops, we don't actually have those up. So I'll need to, sorry guys, I just need to get my technology working this morning. Okay, so back onto the charts. So if we just actually look at a couple of those, we can look at some of the SOFR charts. Um, And we'll just have a look here at the 2 year, for example, to start off with. So you look at the 2 year here. This is on the daily chart. So you see we had a big drop, and it's still actually dropping this morning. So it's interesting to see where we can go there. I don't know. Maybe this is a key point down here, 104.02. But we also see at the back end of the curve, we see, for example, the 30 year, the ZB, also sort of dropping more this morning. So the bonds trading very, very heavy. Um, and essentially that's because both the front and the back end of the curve were disappointed. Again, if we look at one of the SOFRs, let's say for example March 2026, you can also see that that's trading very, very heavy here and lost about 12 basis points yesterday. So the bond market is sort of crashing down. Now, what was the reaction? In terms of other markets. I mean, we of course overnight we had other things as well. So let's put this all into context. So at the same time, we had well not the same time, but overnight we had this sort of much anticipated meeting between President Trump and President Xi. They spoke for an hour or two. Apparently, it was cordial, relatively sort of formal. I think the market's reaction is going to be a little bit underwhelmed. One could argue, obviously, Trump tried to spin it in a very positive way, but from what I can see, reading through the readouts and whatnot, the basic agreements have been that the Chinese are going to do a bit more on fentanyl, like the drugs, trying to sort of stop that flow of chemicals. They're going to buy some soybeans. The sort of export controls on rare earths, they're going to be sort of somewhat lightened, and there's going to be almost like a sort of a moratorium for a year or so. So the rare earths will still keep on flowing, and everything's going to be reviewed. On the American side, they're basically going to take down, the tariffs by 10% or so. So Trump is hailing this as a huge, wonderful victory and a beautiful meeting, et cetera, et cetera. The Chinese are a little bit more circumspect, a little bit more reserved, but nonetheless, it's a complex one because you could argue the glass is half full or half empty. Half full because at least they're talking. There has been a certain amount of détente, a certain amount of goodwill, mutual respect shown, and a little bit of budging on both sides from their most entrenched positions. On the other hand, if you're a pessimist, you could say that at the end of the day, this was relatively symbolic. The actual concrete sort of results of this meeting was negligible, and that tariffs still remain in place, and not much has changed. And so it's going to be interesting to see just how all the markets react. We're seeing here, if you look at, let's say, the equity market here, not really ripping, not really sort of collapsing at all. And of course, we have to put that in the context also. Let's look at the Nasdaq here. Nasdaq, still at all-time highs at the very top of that channel, just kind of pausing a little bit here. Obviously, after the Fed, but before the China meeting, we got some earnings yesterday. We got from Alphabet, Meta, and Microsoft. The only clear sort of positive was really Alphabet, who had very good earnings, and it looks as though the AI investments are directly translating into more revenue. Whereas with Microsoft, it's a bit of a sort of a mixed picture, and Meta was actually taken quite negatively by the markets just because they were saying that they're increasing their revenue by 3 or 4 billion in the quarter, but their capex, their spending on AI is 70, 80 billion, and expected to be much more in 2026. So their free cash flow is really being eaten into by this huge AI expenditures. And at a certain point, the return on investment is the market is starting to potentially to worry. So we have Meta down. And so that's going to be an ongoing sort of issue whether, there's this huge spending on AI by the so-called hyperscalers, whether that's actually going to translate into significant gains in revenue, not just incremental gains in revenue, but significant gains which justify these huge, tens and tens and tens of billions of dollars of capital expenditure every quarter. And so therefore, all of these factors on the equities, as you see, more or less unchanged, fairly flat on the day. Other things to be looking out for. I just want to look here at, for example, you look at something like copper and the whole China thing. You can see that copper's down a little bit. It had a very nice push up over the last few days, but just kind of stabilizing here, even a little bit sort of down, 1.76% on the day. Underwhelmed by the meeting between China and America's presidents. So risk on assets not doing great. And then if you look at something like the Australian dollar, it's actually down on the day. If we look at the New Zealand, the Kiwi also down. So some of these sort of commodity currencies not doing super well, and certainly underwhelmed, as I said, by this meeting. If we look at, let's say, the Canadian dollar, down quite significantly. Of course, yesterday we did have the Bank of Canada as well. They cut interest rates. Governor Macklem basically gave us to understand that he was comfortable where interest rates were at the moment. He emphasized that there was still risk. A lot like Powell, there are risks to inflation, but was concerned about the weakness in the Canadian economy, but didn't see any need to forecast further rate cuts for the moment. But even with that slight, you could argue slightly hawkish sort of take on interest rates, you see the Canadian dollar actually down quite substantially this morning, 35 basis points or so. So overall, the commodity currencies are not doing super well. Of course, today, this morning, we're just looking at the euro here. We have the ECB coming up in about an hour or so. They're expected to remain unchanged and not to do anything. If we actually just look here and have a look at what's expected, you can see here that for the meeting coming up, as I say, in about an hour, absolutely zero percent of a cut sort of priced in or expected. And in fact, if you go all the way out to the end of 26, so towards the end of 2026, you can see that not even half a cut is priced in. So a lot of the rhetoric coming out from the board of governors of the ECB has been that they're comfortable where rates are and that the economy is doing okay. Inflation is no longer a significant issue. Therefore, with about a 2% overnight rate, they're pretty comfortable. So I think today that should be a bit of a sleeper. I guess what the market is looking for is any sort of comments from Lagarde about the future path of the economy. How are they feeling about the economy? Do they feel that there's still significant risks? But all in all, that should be a fairly neutral meeting from the ECB. But then again, that's what I thought about Powell, and he dropped in that one line, which completely tanked the markets. The other central bank which we had overnight, of course, was Japan, the Bank of Japan. Now, what happened in the Bank of Japan? Let's just look here, and you can see that for the next meeting, they didn't cut last night. Sorry, they didn't hike last night. They didn't do anything. It remained unchanged. And you can see here that it's still a sort of a coin flip for the December meeting, about 44% of percent possibility of a cut. So still 50-50 there essentially, 11 basis points priced in. No one really knows what's going to happen there. But if we actually look at the yen, which I'll just go back to here on the charts, let's just go back to the yen. You can see here that the yen actually, just putting on the futures here. So this is not USD JPY, it's the futures. You can see actually down a lot. The most underperforming against the US dollar, so down 90 basis points. And that's basically because in the press conference, there were two dissenters, by the way. There were two members of the BOJ who voted for a hike, 25 basis points hike. But the most important voice, of course, is Governor Ueda. And the key sentence, the key comment from him, and I quote, was, there is no preset idea about the timing of the next rate hike. And essentially, he was fairly cautious, saying that, they could hike, but it would depend very much on how the economy performed, whether inflation continued to edge upwards. There was still a lot of uncertainty about trade and tariffs. And essentially, the market took that to be relatively dovish. And so you can see here the Japanese yen really falling against the US dollar. So all in all, strong for the US dollar, sort of the dollar index here sort of pushing higher. And you've got to just say from a technical perspective here, if we put some kind of Fibonacci extensions on this, for sure it looks as though it can retest these highs just under 100, 99.66, and maybe even just want to push up into around the 100, the sort of that symbolic round number there. So it looks as though the dollar is going to have maybe a couple of days of strength potentially. Again, we don't have any sort of data today. We're supposed to have normally on Thursday, some GDP readings and the initial jobless claims. Obviously, the US government is still sort of locked down, shut down, so no sort of government data coming in. So in the absence of that, this is a little bit what Powell was saying yesterday, that in the absence of data, they needed to be prudent. So really, we're getting into this situation where everything's being very suppressed, just trading in tight ranges. And it's going to be interesting when and if we do start getting some government data. Will that essentially say that the economy is slowing down, that the unemployment rate is going up, that the labor market is weakening, which would definitely justify a December cut, maybe even 50 basis points? On the other hand, when and if the data comes out, will we get data which really reinforces the idea that the labor market is stable, which Powell was kind of trying to say yesterday. This is what Powell was saying. He was saying, well, the limited data that the Fed had did seem to indicate that the labor market was, in reasonable shape. And he emphasized that the unemployment rate, even if it had ticked up by a tenth or so, was still historically at a very low level of 4.3 or so. So it's going to be very interesting. It's going to be a lot of volatility, as I say, if the US government opens in the next week or two or three, and as some of that backlog of data does start to sort of filter through to the markets, there could be a lot of volatility either way. So that's about it. We have some more earnings, some of the big tech companies after the bell today. In terms of other stuff, just have a quick look here at gold. Gold up a little bit, maybe a little bit of the risk-off sentiment, and also look at this Fibonacci level here at the 3950 level, the 6.18. You see here this very big fib level. So measuring it from here, you can see that gold having a push up. And if we look at silver, also sort of pushing off that 61.8 fib retracement here, a bit of a risk-off tone. So that's about it, guys. I'm going to leave it there today. Let's keep an eye on things. We have a couple of Fed speakers, although they're still technically in a blackout mode, so I don't know that they'll be discussing too much about monetary policy. So probably the next big thing to get through, although I personally think it's going to be a bit of a sleeper, is the ECB meeting coming up, as I say, in about 45 minutes or so. Okay, I'll leave it there. Have a great trading day, and we'll be back with this tomorrow. Thank you.